Welcome to TheoTrade. This is Don Kaufman. October 31st, 2020. Happy Halloween and welcome to the island of St. Croix, United States Virgin Islands. Let's get down to business on this weekend's update. A lot of volatility in this past week of trade, over a 200-point move inside of the S&Ps. We actually neared a 3 sigma move in the overall marketplace. We're going to look not only at some of the risk to come, but really evaluate what your risk is coming into this massive binary event. Additionally, a major shift in implied volatility skew that really changes the way that I look at next week's election. I'm going to show you that here momentarily when we look at some charts and a couple of trade ideas. And again, the one aspect that you need to focus on as a trader, as an investor, net people, what is your risk coming into this event? With that, let's just jump right into it. Let's look at some charts and a couple of trade ideas. To the charts and trades we go. We're going to start our evaluation right here inside of the spiders, of course, the broader S&P 500, trying to answer the question, when will this market horror show end? Yeah, very Halloween-esque title to that. But hey, let's just cut to the chase and get right to it. The binary event, people, is upon us. And before we get too detailed into volatility is bid, and we're going to look at the shift in skew, I just want to back away from some of the more in-depth discussion and just point out where the S&Ps happen to be. And that's this. We're just right back to where we were a few weeks ago. And everybody's, we're sold off hideously. Yeah, we had almost a 3 sigma move inside of the S&Ps. But net, again, a little perspective, okay? We're right back to about this 320 level inside of the SPY, which we're going to learn here momentarily is a very, very critical level inside of the SPY. And again, coming into a binary event, this really is of absolutely no surprise. Again, we're going to describe volatility right here, right now. First and foremost, some, again, fairly heavy sell side activity hits the marketplace. What did volatility do this week? So when I say volatility is bid, most people are, of course, thinking about the VIX. The VIX takes off to the upside, but let's go a little bit deeper than that. So the VIX, of course, takes off to the upside. The volatility futures, of course, take off to the upside. The VVIX, and we were talking about this on the Wednesday night video, the VVIX, it was screaming, that pain was coming, of course, on Wednesday. Did you listen? Because again, the VVIX, hit clear through the 150 handle. So all of your volatility indicators are bid, but that isn't really of a massive concern to me. Right? And again, that's where it kind of surprises people. I'm like, whatever, man, the VIX is up and it should be up. What surprises me, okay, is that a categorical shift in the skew itself. And this is the area, again, that I think most people are going to miss inside of the marketplace. If you'll remember back, okay, in many of the videos I've done over the, the evening videos and over the last few weeks, I've been talking about a surprising, change in implied volatility. And that is over the last couple of weeks, December and January volatility, have actually held their kind of own over there. And when I say December and January, I'm saying the volatility was actually higher back in December and January than it was, for the election itself. And I want to stress this again. When I say the election itself, again, if you take a look at implied volatility, and doing that right now on this right-hand side of the screen, implied volatility always kind of tells a story. And the story kind of goes like this. Obviously this is Monday's expiration. Yes, there's a Monday expiration inside the SPY, and it's at about a 30 volatility. Then we jump clear, for November 4th to a 47 vol. Then drop off just a little bit down to about a 45 vol for the end of the week. But the differential, the shift in skew, is that this week, now holds a tremendous amount of the volatility, whereas just about a week to 10 days ago, it was these back month options that were actually carrying the heavier volatility. And our assumption was, again, just a few days ago, that the election may not be decided until all the way back here until December, January. Listen, that notion hasn't gone away. The volatility in these back months is still absolutely huge. However, Okay, what you need to understand about this shift in volatility is that, yeah, this next week, put on your big boy pants because we're going to move and we're going to move really big. And that is, again, in stark contrast to what we saw just a couple of weeks ago. So we really are pricing in much more of this kind of binary event with this very quick, okay, vol skew that has shifted and brought volatility kind of to a theater near you, literally in this next week of trade. Also, very, very interesting in here that we're maintaining volatility bid in like November 9th, November 11th, November 13th. It starts to fade after that, which is kind of what you would expect. Okay, but we're going to keep a very, very close eye onto this, even into Monday, because again, big time contrast of what we would have anticipated just about a week ago. Volatility completely upends itself. Vol skew comes forward, and well, risk is upon us. So the one aspect you gotta, ask in all of this is, the big pump up in volatility, all smoke and mirrors, or is a real move coming? I'm going to try to answer that for you by looking specifically at the SPX. And there is, there's something that you need to understand, of course, about volatility and some of the moves that we've seen. One of the first things I'd like to point out inside of the SPX, so we're going to look, of course, at expected move, and we'll talk incessantly about, how big the expected move is here momentarily, but it was the breach of expected move that really, caught our attention, of course, in this last week of trade. And I'm talking about a breach of expected move. I'm talking about that. Okay. It's a fairly hideous move to the downside, of course, in the week. And net, whenever you see a hideous move like this, you start to kind of compare it to like, how many standard deviations outside the norm, okay, is this? And that's something that, again, I'm going to talk a little bit more about the 3 sigma move down here in a moment. But this is, and I'm just going to put this in context for a second, this is, okay, the largest move we've seen since the onset, of course, of the coronavirus. And then you have to question, was this more of like Corona? Was this the election? Listen, okay, don't rack your brain on any of that. Just push it all aside, because the news at this point is only going to interfere, all right, with your judgment. Your judgment needs to be based on the fact that this is going to be a very pure and very simple binary event. And I keep stressing this idea of a binary event. It's just like it sounds. You're a 0 or you're a 1. You're a coin flip away, okay, from a very, very significant move. And when you're looking at this, we are getting a very large expansion in volatility. When I say is it all smoke and mirrors, though, and there's a real move coming, okay, you can absolutely expect real moves, vicious moves. However, this volatility this time around is going to be very, very advantageous. And we're going to go out and even start to nibble on some sell side of premium. Okay. Now, this pullback that we saw inside of the broader market, again, it can feel huge to you. It was, it was a little hideous. The marketplace stared down, some pretty ugly numbers throughout the course of the week. But again, net, we're back to where we were just a couple of weeks ago. I think the better way to actually to dictate this is once again to go to the spiders. But I also want to bring up like the NASDAQ, the QQQ, which the QQQ isn't even back to the 260 level. We're not anywhere inside of the Qs. The IWM, start to bring up the Russell. Okay, the Russell's still a hop, skip, and a jump away from like all-time highs. So again, sometimes you got to step away from some of the volatility on a day-to-day basis and just gain a little perspective. We've gone nowhere at this point. In fact, if you bring up the SPY and you actually open up, for instance, to a 5-year weekly, all right, we made a little bit of a move, but it's a blip on the radar screen. We've just scratched the surface in terms of volatility. Now, okay, let's start to talk specifically about levels. So when you're coming into a big binary event, and again, you're going to hear that terminology time and time again, because I don't want you to think that anybody is capable of handicapping like we're going to go up, if this happens, in the Senate and this happens with the election, we're going to go up. If not, we're going to go down. Okay, got to push it all aside. The marketplace right now is just screaming to you, just get ready for a larger move, which is exactly why I was talking about in the video portion a moment ago. You better have your risk under wraps. And again, we'll discuss that here momentarily. But net, okay, gravity points are back in fashion. And if you're unfamiliar with our terminology of gravity points, these are very specific concentric levels. And this is 3211 right there. I'll explain the gravity point here momentarily, okay? But 3211 is an absolutely critical inflection point in the entire marketplace. You don't have to go back too far to see, okay, how many times this has been an inflection point. Now that I said it's a critical inflection point, I'm also going to tell you something about 3211 that, and really all these gravity points, I've actually gone back and done huge regression analysis on our own gravity points. And literally every single time we hit one of these gravity points, okay, you'll explode higher or lower off of that. It's a pure 50-50 on those gravity points. How about that? Like, not too many people are going to come in here and say, oh, no, you know, we're going to go up or we're going to go down. I'm telling you right now, it's a pure 50-50 in here. And that is why, okay, I listed, you know, time and again, it's binary event, it's binary event. What is a gravity point? When I say it's a concentric area, what it really kind of breaks down to, and I'll zoom in for a second on this 3211 gravity point, what it really breaks down to, trading firms, okay, carry very substantial positions over time, and those positions, okay, often get carried forward and get amplified over time, right? What you get in a gravity point, it's like a seam inside of the risk. You have to think of, like, you know, these trading firms carry huge gamma risk, you know, up here, huge gamma risk down here, but a gravity point is like a seam, literally inside, okay, of their positions. And it's, you know, people say, how do they form? Over time, they're carrying these positions forward, and the positions just continue to grow and grow. And you got to look at, like, the gravity point is almost like a happy place, okay, of where gamma, all right, just kind of mellows out. Their delta isn't that big. But the problem with the gravity point is then it becomes a huge stepping stone and inflection point to go higher or lower. And it is, it's ironic, of course, right before one of the biggest binary events in history, that we actually fall right back to the 3211 kind of gravity point. Now, we are absolutely north of the 3211 gravity point, but I would believe that we got some unfinished business at 3211. Like, don't for a second think that you know, we're not capable of coming back down here early on in the week, but I would believe that 3211 is going to make an appearance, and when it does, that's the critical inflection point, okay? If we head under it, when I say head under it, I'm not talking about a point or two. If you start to push off, okay, the downside of the gravity point, the way these things work, all right, big kind of concentric level of where the risk is, we start to push off a little bit lower. That's where the trading firms, okay, will start to accumulate risk, and they'll sell into selling. So if we head, you know, 15 or 20 points lower, okay, than 3211, trading firms are actually going to kick on servers, and they're going to sell this marketplace, and it is going to get ugly, and it is going to get ugly, okay, in a hurry. Now, at the exact same time that I'm saying that, and again, I'm trying to give you a feel for not only like that 3211 level, okay, but what's likely to kind of play out if we start to crest below it. I also want to give you the other side of that. You have to have an assumption that a rip your face off rally is also, okay, going to come into play over here. However, that rally, again, I think it's going to be sold into, because again, I think we're going to end up right coming into, you know, some of the bigger binary, you know, events this week. And the binary event isn't necessarily the election day. It could be a day after it. It could be Thursday. It could be Friday. It's tough to kind of handicap that. But my belief is we're actually going to sit right around this 3211 until, okay, we hear something more definitive. And that's why I said, you know, under 3211, things get ugly, but assume that you got to have a rip your face off rally kind of packed in there. Nevertheless, you get a rip your face off rally where you think they're not going to come back in and sell this thing, okay, it's going to get violent. All right, it's going to get violent over here. And speaking of violence, you got 3 sigma moves continue to just haunt premium sellers in 2020. Now, this is a big one. This is a really big one. It's rare, of course, to see a 3 sigma move. For those of you that don't speak complete and total geek, all right, listen, this last week of trade, all right, the expected move, EM, equals, that is expected move equals about $78. So this last week, we're supposed to go up $78 or down $78, right? You see it right over here. Now, what was the actual move in here? And I'm going to jump back down to the expected move. The actual move, 207. So when I start talking about, like, you know, 3 sigma and 2 sigma, what am I really talking about? So the actual move was about 207. and of course to the downside. And that didn't even include necessarily, we touched down even further than that. We literally did touch into 3 sigmas. So what 3 sigma means, it's just, it's like 3 times, okay? It's just 3 times that 78. And it's a party, people, because you know what 3 sigma does to people that sell premium? It absolutely takes them apart. And this is, again, we've seen a number of just wild 3 sigma events occur, okay, on a weekly basis this year, sequentially. And when you start to look back at this, by the way, for those of you that are real market geeks, you look back over the last 3 years, you can look back over the last 5 years, you're not going to see nearly the number of 3 sigma events. The market right now, it's so tightly wound. Like, people think they're going to go out there and they're going to sell options premium and they're always going to make money doing it until, of course, a 3 sigma event comes. But now that 3 sigma event has kind of reared its ugly head, now I think we've actually got some opportunity, coming to us. Before I get there, I also want everybody to recall, I'm talking about 3 sigma events ripping apart, premium sellers. I want you to recall, we've actually been on the buy side of premium. We've been doing gamma irons. We've been buying in-out spreads. We've been buying risk twist spreads. We've been out there with, back ratio spreads. Okay. Anything that doesn't involve premium selling is kind of where we've been. But now, okay, we're going to talk a little bit about just that. We're going to actually discuss for a moment here a little bit about premium selling. Before I do that, okay, you got to talk about your own risk and positioning. Now, I know precisely what my aggregated delta risk is coming into this particular event. And I'm actually going to pull up the spiders for a moment. And without going into, in depth of like risk analysis over here, I'm going to come into this event, okay, short 3,000, okay, SPY deltas. So I'm going to come into the event short 3,000 spider deltas. That may not be right for you, okay, but I'm comfortable with the risk. The point that I'm making over here, so I'm short 3,000 spider deltas, which, in effect means, does he want the market to go down? Of course. I'm short 3,000 spider deltas and had an absolutely spectacular week. But what happens if we pop back to the upside? I'm going to take a little bit of a hit, but it's nowhere that we haven't been before. One of the things you want to do, though, with that, whatever your delta risk happens to be, and again, not everybody's necessarily comfortable aggregating their risk. And for those of you, you're at TheoTrade, you get in there right now, this weekend. Okay, you got this weekend, you got Monday. Figure out what your aggregated beta weighted delta risk is, because you can't be caught off guard by what's about to happen here. Everybody sees it's a binary, risk kind of position. Then I want you to come over here to the SPY, okay, and I just want you to look out. All right, just look out, just a few days. That's it, and you'll see it says about $16. Let's just round this to about $16. What am I looking at right now? I'm looking at, all right, the expected move just for this week. You don't have to worry about next week yet. Let's not get crazy. Let's just get you through this week. It's about $16, right? $16. So what are we saying about this? All right. Well, the expected move, what it's kind of denoting here is one of these. So here we are inside of the spiders. We're trading what? That 326 level. We're looking for a $16 move to the upside or a $16 move to the downside. People, that's a 1 standard deviation move. Let's get crazy. Let's actually talk about, maybe 2 deviations. I'm not even going to go to 3 deviations. We just saw one of those. But could you have a $32 move to the upside or a $32 move to the downside? And the answer is absolutely unequivocally yes. You can have a $32 move. Of course you can. Now, in a linear sense, this isn't the perfect way to do this. And I'm going to take everybody through this equation again on, of course, Monday during my session here at TheoTrade. But in a linear sense, let's take my 3,000 SPY deltas, okay, and just multiply them, okay, by 16. When I say in a linear sense, that's my P&L. So I'm going to tell you right now, okay, if I can't sustain, all right, about a $50,000 move in terms of P&L, what I'm doing is I'm giving you my P&L variance. Because if I'm sitting right now, all right, short 3,000 SPY, all right, deltas, and there's a There's a $16 expected move. That's it, people. I'm pretty much going to tag, $50,000 P&L this week. And on the outside of that, what happens if we get a $32, move? You double it. I could have P&L here as much as almost $100,000 coming into this week. But I'm telling you right now, okay, that's comfortable. at this point in time. I want risk coming into this binary event. I'm ahead of the game after the sell side activity this last week, and I've actually amplified some of my position size because, again, I want the risk. Bring it. That's comfortable for me. Well, you have to determine, you just got to get through like the next week, then we'll worry about from there. That's okay if you want to start looking like 30 days out. You know, you look at like 30-day out risk and you're like, oh my gosh, it's $28. Listen, these expected moves are all puffed up right now. It's the puffy shirt. They're all puffed up. And that's actually going to give us, all right, the ability to sell a little premium against existing short deltas. So what I'm actually going to do is I'm going to take, all right, my short 3000 SPY delta, and I'm actually going to sell way out of the money premium all the way down at like, 10 delta level. I'm actually going to sell a bunch of puts inside of stuff like the SPY, inside of stuff like the SPX. If you don't have the capital, you can actually do it on the options and futures, okay? Because that's a little bit, more capital intensive to actually sell puts against this. And I've already begun doing so. All right, I've already begun doing so, and I'm not just selling them here in the SPY. I'm actually selling some QQQ premium, okay? Because look at this, the volatility is all pumped up in here, but I'm selling some Q premium. I'm selling just a little bit of SPY premium, just nibbling right now. I'll be back on it, okay, coming into Monday. Again, with this kind of expected move, and the last point I want to make over here, with this kind of expected move, last week, a $78 expected move. This next week, you're looking at about a $160 expected move to the SPX. In fact, let's pull up the SPX because, the only way to really gauge this, take a look. Take a look at that. That is fierce, people. You trade all the way down to like 3,100 or back up here to like 34 and change. That is a big boy move being priced in over there. And with this huge expected move, again, I have a tough time thinking like another 3 sigma move would be coming, because a 3 sigma move, that's 160 times 3? I don't think so. So what I'm going to do is I'm going to sell some way outside premium, and let's see what this marketplace can do. Let's see if this marketplace brings the pain. We rally back up, but I'm going to tell you right now. All right, this one is going to be a big week. You want to stay tuned in throughout the course of the week. You want to know what your aggregated risk is, because the only way to get through a binary event, all right, forget about adding position risk right now. Know what your current positions are. The only people that make money in these volatility events, okay, are people that can handle their current risk first. You got to be able to manage what you have on to be able to think, okay, clearly, and then be able to add positions throughout the course of the binary event. With that, thanks everybody for joining us here at TheoTrade. Again, we're going to have a fairly intense week. Stay tuned in throughout the course of this week. Have a great weekend, everybody. Bye-bye.